All right. Well, everybody probably watching this makes a lot of money, but we all pay a lot of taxes. And today, hopefully, we can change some of that. So I've got my good friend here, tax strategist, CPA, tax planner, Mitchell Baldridge. Mitchell, thanks for joining us today.
Man, Jeff, Dr. Jeff, thanks for having me. How are you?
I'm doing great. I know you and I have done quite a bit of business together with some of the different companies that you own that we'll get into in a little bit. And I know you have a huge following on Twitter, which you're putting out some great value and content. So for those that don't know, maybe follow you on Twitter, don't really know much about you. Who are some of the people that you work with, and how are you helping them?
Sure. I live in Houston, down the road from you, and I'm a CPA and a financial planner. And I have a small tax practice and a small kind of financial practice in Houston, Texas. But then a few years ago, I started to get on Twitter and start giving out the best ideas I'd ever thought of for free, and have developed a little bit of a following and met a few folks along the way. And so we have a couple of different things we do that we'll talk about. But I work with real estate syndicators and small business owners to help them reduce their taxes and grow their business.
Yeah, no, I think it was 2 Sundays ago, I had, like, written a Twitter thread, maybe, like, 10 tax strategies or something like that, and it was right before we walked out the door to go to church, so, I sent it to you, and you were nice enough to retweet it, and, after church, like, an hour later, I was showing my wife, so, "Hey, look, this has already got almost 50,000 views," so it's amazing just your following that you have, so I really appreciate that.
Oh man, that's great. Yeah, yeah. No, it's wild of the people you can reach and the people you meet. I meet a lot of impressive people now.
So
But
I talk to physicians and dentists all the time, and they they come to me usually for one of two things or both. Number one, they're looking to either retire early, or have the option to retire. So they're wanting other sources of income, passive income. Or number two, they know that they pay way too much in taxes and they want to do something about that. And a lot of times they'll think that investing in some of these different deals that we do, like syndications, will have effect with their physician or dental or whatever they're doing taxes. I know, but
sure.
there's some confusion in that. So maybe talk. Let's start with the basics. So you're somebody out there, you're a high income professional and you pay a boatload of taxes. What are some of like just the basic things that you should be doing before we get into kind of the more advanced stuff?
Yeah, so for physicians out there, I mean, when a new physician client shows up at my office, if they're just a strictly W-2 guy or gal, one thing you can immediately start doing if you have the time and the inclination is trying to find some kind of self-employed income in your life out there. And and dentistry is one of the best platforms to do that out there, in the sense that you can go take locum shifts, or you can go kind of uh scratch out a few hours here or there, get a relatively high dollar per hour doing that, because it's just a huge demand profession. And that I wrote a Twitter thread a couple of days ago. Small business ownership is the best tax deal in America, and I believe that. And I said, kind of like, whether you have a 10K side hustle or a $10 million business, like, business owners pay less tax. Like, that's just how it's set up. And so, if you're an employee at the hospital, the you know if you want to break open the tax regime, one thing to do is just set up a small business and go start getting some money in the door. And then what happens immediately is, these expenses that exist in your life already. I had all these expenses in my life was when I was an accountant at a big accounting firm. I had a cell phone bill that wasn't reimbursed. I had a personal laptop. I was taking education courses that weren't being paid by my employer, like those started to open up immediately. And then you open up, different retirement planning strategies, and frankly, you just make more income. So that to me is step one of the kind of physician path to retiring early and paying a little bit less tax is make a little bit more money that has a drastically lower tax rate,
So
right?
I guess the same thing would be if you're a dentist
Sure.
and you're working for like a group, like you're an associate, you're going there, you're just, you're getting paid probably like collection. So what you're saying for that person is maybe go work at another, do like a fill in over here, work at another office or something like that. Is that correct?
Yeah, yeah, and I mean, I see that often where dentists, yeah, I'm working 4 or 5 days a week over here. If I can do one fill-in day, I had a dentist client who had exactly that, where I think he was working 3, maybe 4 days a week, and he picked up 2 days a week at another joint, and they were paying him as a relative percentage of gross revenue, if I recall. He was getting 40% of revenue, that,
Mhm.
and he was doing crowns, and he was doing, all kinds of stuff, and he was making good money, and it just opened up this whole new category for him that allowed us to start taking expenses and to start kind of doing retirement planning above and beyond what he could even do at his regular practice. And so, yeah, that was a big opportunity for him.
Okay, so that's kind of the basic, which probably some people watching this or listening to this probably do, some sort,
Sure.
or we have several people that are like myself or practice owners. So, I own my own practice, plus I have another side business. So now we've got that. So what's maybe like kind of the next step or kind of the intermediate steps that they could be taking or looking at as well?
Well, what a reason that you and I are friends is because for me, kind of all roads. Get ready, everybody! I'm going to tell you to get into real estate because all roads sort of in there in the sense that, like, at once you've exhausted all of these, so you have this hierarchy of how you can invest excess capital, and I think first and foremost, excess capital should be invested into yourself. Like, you should reinvest in your business. First of all, you get a tax savings. Second of all, eh, you know you should be the best investment around you. But at a certain point, even dental practices, I know those chairs get expensive, but they're pretty asset light. You can only pump so much money into the highest quality machinery, the highest quality equipment, the best systems, even the best advertising. Hopefully, you do all that, and your dental practice is making even more money, and you're paying even more tax, and you go, oh no, when's it going to stop? And then at that point you have excess investable capital. You can stick it into treasury bills, you can put it in the stock market. Well, what I try to do is break out this whole other category of how can I invest in sub-institutional private assets that give me a tax benefit today. And so, there's a lot of those. You can go do solar credit schemes and, buy a private jet with a bunch of people and go rent it in a pool, or, you know, go buy a charter boat or go buy Caterpillar equipment that gets rented all about. Well, the problem with that is all of that equipment or all of these schemes go to zero, in the sense that 7 years from now, solar panels and Caterpillar dozers are going to be worth 20% of whatever they cost to go into service. So that's why real estate is really the best kind of like investable asset, because you get tax savings today and then it goes up in value over time. theoretically, right? Or at least it doesn't lose 80% of its value over 7 years, hopefully. And so, really, uh, to to your point, and we were talking a little bit before this call, it's not as simple as just, okay, well, yeah, great, I'm a doctor, I'm going to go into real estate, I'm going to scratch out a couple of $100,000 checks to a few guys, and I don't pay tax anymore. That's not how it works, because there's this little kind of sticky wicket in the tax code where your earned, uh, employment active income is bifurcated from your passive income in the tax code. So you don't get to create a bunch of passive losses through real estate and offset your active W-2 or active physician practice income. You have to get a little bit more organized than that. Does
So
that make sense?
explain to the people that aren't really sure what a passive loss is from real estate.
Sure.
Explain to them like what that is, what that entails.
So the IRS code out there um defines rental income as a category. Just basically, I'm renting out this space, and people are paying me to use it, and I own it. And then they say that income type is passive by nature. It just inarguable. So, if I'm, whether it's self storage or a mobile home park or an office building or a triple net lease, whatever, the rents I get paid are passive income, and all the expenses relative to that are passive by nature.
So if
And
I
so
have a building and I'm practicing in,
that's a
and
different story.
I've got some space that I'm leasing out to another physician or dentist. So the income that that person is paying me is categorized as quote passive income. Is that correct?
Yeah, unless it's effectively connected with your trade or business, there you're getting into like the most corner case. Let's reframe this a little bit. Of I own a building and I take the bottom floor for my physician practice, and that's not rental income. That's a business activity.
Mhm.
But let's say it's a three-story building and there's an accountant on the second floor, and there's a radiology center on the third floor that you have no ownership in.
Well, the guy across the
uh
street from me, my friend, he's a cardiologist on the bottom
yeah,
floor, and there's an accounting group on the top floor. So that's
bingo.
perfect
That's
situation.
a Yeah, so that example, that is rental income at the top floor, and that is a business expense on the bottom floor. But
Okay.
so, and we'll get into that in a second, but just this idea of rental income being passive in nature, therefore all the losses created by depreciation out of that rental income. Because here's the upshot: is that when you go buy a building, that's a rental building, you put down some equity and you take out some debt, and then our group, RE Coseg, runs an engineering study that frees up a bunch of year one losses through bonus depreciation that's out there today. So let's say you put $200,000 into a deal, and they buy 500,000 a building with that, and you get 200,000 of loss right back. Well, you want to use that, but it's passive. And the only folks that can use passive real estate losses are real estate professionals out there. So they spend 750 hours and more than half their time acquiring, constructing, reconstructing, uh, brokering, managing real estate. And so if you're a physician, the best way to become a real estate pro is probably to have a spouse that's a real estate pro. Because physicians work a whole lot. So it's hard to, dentists work a whole lot too. So it's hard to argue that 750 hours and more than one half your time is spent on real estate, right?
Right.
So what a lot of docs do is they have their spouse run the whole program and get to 15 hours a week spent on acquiring and managing and, you know, dealing with the entire real estate portfolio. So then if you just go, "Hey, I'm not married and I work 3,000 hours a year as a doctor," then your only other paths through are to buy your own building that's a part of your practice that's designed for your practice. Doctors do that all the time. We have a physicians group down the street here in Houston that the partner group of the doctors has made way more money ever on the building than on the operating practice because it's just this prime piece of real estate and a really really wonderful building. That's the ideal. But then there's a couple of other little hacks out there. One of them is the short-term rental loophole. You can go run an Airbnb, and so long as you materially participate, meaning you spend time in that building, um, or in that business operation, you spend 100 hours and more than anybody else, or 500 hours in the whole business. That then Airbnbs aren't rental property. It's a hotel that happens
Hospitality,
to be,
huh?
yeah, it's a hotel that happens to be run out of an old crummy house that you've fixed up a little bit.
Here's a
So,
crazy story for you. My
mm,
wife's cousin, it lives 30 minutes from us. Her husband's a ER physician,
sure.
and they've got 4 or 5 houses that they've been short-term rentals for years, and we started talking about the short-term rental loophole. They didn't know anything about it. Their accountant hadn't said anything about it, and, he's
Wow.
always complaining about the crap load of taxes he's paying from the hospital. I'm like, "Dude, you're set up. Your wife is running them. She's materially
Wow.
participating. You could take all those losses, get the cost seg from you guys." And so there you go right there. So that's why it's so important to, because if nobody, I mean, nobody's going to look out more for your money than you are.
Sure.
It's not your tax advisor or whatever. I mean, it's going to be you. So educating yourself on this to go to somebody that can help you. I mean, that's the key.
I totally agree. And yeah, it's just it's the same thing as the physician or the dentist out there where uh, somebody cleans my teeth and then you walk in and you turn to the hygienist and you say, "How's it looking?" And they go, "Oh, it's pretty good." And then you go, "Hey, does it hurt?" And I go, "No." And you kind of walk out the door. I mean, a lot of people have that experience with their accountant in the sense of, and granted, yeah, a bunch of short-term rentals showing up on the tax return. Somebody might have should have said something, but you know what? It is what it is, man. Nobody, to your point, is going to advocate for your health or your money like you are. So it is important that you understand the rules.
Right. So
Um,
the person, so that's one thing they could do. They can get the spouse to be the real estate professional. They could do
sure.
short-term rentals. Anything else that they could do regarding real estate wise that you can think of?
Well, so once you have the real estate pro in your life, you can go start doing passive deals. I mean,
So what
you
so
can
what
just go.
happens what happens in that situation? Tell us some things that they could do if a spouse is now the quote real estate professional.
Well, let's just say full fledged that your spouse is a realtor. I'm a doctor, and my spouse, works for Sotheby's or whatever, selling houses all day long. Well, you can effectively aggregate all the real. You can make this election to aggregate all the real estate activity into one, and provided that it meets the aggregation guidelines, you can then go hand passive LP checks, limited partner checks to real estate syndicators. And really before you invest in a deal, you can ask them, "Hey, how much, year one, I'm going to hand you $100,000. You're going to hand me a K1 next February, hopefully, or August, more likely. And on that K1, it's going to show that you took some chunk of depreciation. What is that? What is my $100 going to net me back in a year one loss off the bat? And that's a way to, in effect, I mean, a lot of doctors and dentists have defined benefit plans or kind of big retirement plans. If I can hand a real estate syndicator $100,000 and get back a K1 that says I lost $90,000, I've effectively created what's a retirement plan. I mean, I've created this deferred tax liability, meaning, you know, I'm going to owe the government money later. I know that, but to but today I'm riding on the float from Uncle Sam. And so, you can go do a lot of those deals, and you can stick away as much money as you can, and it just effectively kicks the can down the road. It just means you're going to have to pay the tax later.
And
So,
for clarification about
mm,
that situation where the one spouse is a physician or dentist, the other spouse is a realtor, that that they still need to own their own property, correct? They just can't be a realtor in order to get real estate pro status. Is that correct?
no, no. You
They don't
can
have to. They don't
spend.
have to own any property.
So there's this publication 925 that's the passive activity and at risk rules, and when you go to the real estate pro section, it talks about basically a real property trader business is a trader business that does any of the following with real property: develops, redevelops, constructs, reconstructs, acquires, converts, rents or leases, operates or manages, brokers. So you can be a full-time broker, not own a dollar of real estate, and you're a real estate pro. So the big opportunity sets are, what if my spouse were a general contractor? Or what if my spouse owned a property management company? Property managers are real estate professionals, regardless of whether they own property.
Hmm.
So there are a couple of kind of ingresses into real estate pro status that not everybody takes advantage of out there. So
Yeah, it's almost
worth
like you
noting.
should. I mean, that would be great. You tell your spouse, hey, if you don't want to, you know, keep working. Because I know a lot of dentists that their spouses are their hygienists, such as
Oh
mine.
yeah, yeah,
So instead of saying, hey, I can pay you 40 or 50 grand a year as my hygienist, you don't even have to come clean teeth anymore. You can be a full-time realtor and in essence save make a little money, but think of the tax savings that you would save us being able to write
yeah.
off, using any losses for the dental income. So that's kind of what you're saying that could happen.
That's it. Yeah, yeah. And so then they're able to, yeah, go make money selling houses or make money managing property. And I mean, this is non-trivial, telling your spouse they got to go to work to, sell houses if they just don't want to.
Yeah.
It's probably not going to work. You know what I mean? Or going in building spec houses is just to try to save taxes is a terrible idea. But this has to, they always say don't let the tax tail wag the dog. And I mean, this is the number one case of that, of like, you're already a rich doctor or dentist, so like, let's not complicate your life into some crazy chaos just to save some tax. But this is also a path through to take this fast money of how long am I going to do this, of standing over people and relying on my hands and my body and my eyes and all these things, and relying on working at this pace. Well, what if you were able to take some of this money and push it into assets and save some tax and grow the wealth snowball kind of over time. Like this is just one path to do it. That's a little bit more tax efficient than just taking all your earnings, paying tax, and then investing into, you know, index funds and stuff like
Yeah.
that.
Yeah, and a lot of time, the way that I got into this was like more of an insurance policy because I hurt my wrist snow skiing years
Ugh.
ago, and that was a wake up call because my kids were 7 and 9 back then, and I was like, man, if I can't use my hands and work, I'm a solo practitioner, then what am I going to do? And then like you said about 15 minutes ago, all roads lead to real estate.
Yeah.
And I'd never even thought of it, never even, nothing like that. So for me, it was more, having these checks. And over the last 5 weeks, I've had like 3 or 4 checks come in, not big checks, 500, $600, but I mean, that's $500 or $600 worth of checks that I've never would have gotten before that are pretty much tax deferred had I not, started educating myself on this. So, I
Sure.
think we go through all this school, we get all this debt, and we're just so tired of being broke. We're so excited the first 4 or 5 years to be making good money.
Yep.
And then after a while, it's like, okay, well, this is great, but as you know, all the newness wears off and I'm paying a lot of taxes. So I'm getting tired of it. And then they do it for another 10 years. And like, man, I'm sick of this. I'm starting to burn out. I'm sick of paying all these taxes. What can I
Yep.
do? So I'm trying to educate the people in that because I want them to be happy, enjoy their work, not have to be so stressed out about taxes and money because we all need good, doctors and dentists, treating us
Sure.
as we get older. So just being able to educate yourself that you're doing a great job on it and Twitter and your other things that you're doing. Um, just to educate people so they can figure out which path that they want to go down, so I think that's a great service that you're providing. So you talked a little bit about the cost seg group that you have. So tell us a little bit more about that group and kind of what that is. And then you also have one about bookkeeping too, because
Sure.
I know that, for a lot of us, we're kind of all over the place with that. So tell us a little bit about those two things.
Sure. Yeah. Thanks. So RE cost seg, real estate cost seg, recostseg.com is our cost segregation firm. I talked a little bit about this in concept that, when you buy a new property, you run this engineering study. We give you a report that you can just hand off to your accountant that breaks your property into the personal property versus the real property. The types of property that can be bonus depreciated year one versus the long life property that's going to be, 27 and a half to 40 years. And we're a little weird. We've developed this system and service where we took kind of a beginner's mind to the process of cost seg. We've hired some engineers that have worked in the industry for a long time, but then we've taken and you've had this experience, Dr. Jeff, but of like we use video teleconferencing to go uh, inspect properties that are in kind of remote locations or even smaller properties where it used to be in the old sense you'd have this $1 million property and someone would want to charge you 6 grand to fly out to it and walk around the thing. And now we get on a call with the property manager and highlight the big items. And we use blueprints and inspection reports and county data to really put together a super high quality engineered study, but at a more affordable price than what's been traditionally offered. So that's been our big focus at RE Cosseg. And then, yeah, you mentioned better bookkeeping. So
Well, but
better bookkeeping.
before you
Sure.
start on that, I've got my RE cost seg report pulled up
Oh,
that you
let's go.
guys did. So my friend of mine connected with, he runs about 5 mobile home parks now in Louisiana. So him and I partnered on one in South Louisiana. And yeah, you guys, I'm looking over here. You broke it down into 5, 7, 15, and 27.5 year value. You had the improvement bases. So let's see, the first year you guys had said the first year depreciation was 1.3 million. First year tax savings, basically 500 grand. So and I mean, it literally took like, I don't know, it would have taken, I don't know, 5 to 6 weeks, took y'all like a week to do. So it was just like,
Man,
boom, got it done. A lot lower cost than what, because of the video conferencing, that you
yeah.
guys were saying. So yeah, that was really cool to do that, and very neat, easy to read report. So that was good stuff.
Well, yeah, thank you for, yeah, you've been an awesome champion of our group and what we're doing, and yeah, we appreciate it. So,
And
but
then
yeah,
tell us about the bookkeeping too, part of it as well.
yeah. So, I I've been a CPA for 10 years and, have always worked with business owners, always worked with small business owners and physicians and, real estate brokers and folks like that. And to your point, you're a solo practice. You're just kind of trying to keep everything together. And what we've done is kind of built a system. We built our own general ledger software system called betterbookkeeping.com, where it has, just plaid that kind of connect your bank thing on the front end of it. And then we kind of take over all the work from there. So, we work with solopreneurs and founders and small venture backed businesses to just kind of take over. We call ourselves like the founders operating system for finance. You know what I mean? We categorize all the transactions for you. We create reports, but where we've leaned in a ton is in quarterly tax planning and annual tax planning, where we put folks all on kind of a very streamlined system so that we can come in and give you quarterly advice and give you annual advice, tell you what you need to pay Louisiana and the IRS, and get your taxes done on time and all that. So it's kind of one stop shop bundled service for business owners for accounting, tax planning, and tax services out there. So that's betterbookkeeping.com.
Excellent. Yeah. And so would they be able to help, or would that company be able to help with somebody like we had talked about earlier that's working for a hospital or working for a group, and then they're starting to do a little bit on their
Certainly.
own with 1099 income and some expenses, and so that would be a good strategy, things that they could do as well with that.
Yeah, we've already, we're growing quite a bit, but we definitely have several we have a dermatologist, we have a few therapists, we have a couple of physician clients. So that it's definitely a target of ours in the sense that, yeah, I mean, no matter if you're a contract physician, no matter how big you get, you're not going to hire a bookkeeper, or like you're not going to hire a full-time staff member who's going to be able to replace the accounting chain that we're able to replace. If we have a bookkeeper, we have a tax preparer, we have a CPA, tax reviewer, signer. We're just trying to give everyone that kind of like fractional back office, even as a solopreneur out there, right?
Yeah, that's true. I work out at the local college, and then there's a DO school that's also here as well. And I've befriended several of the DO students, and they've been following me on YouTube and stuff like this. So they've been asking me questions, and I'm like, look, guys, you know what you're getting into. I mean, you know that you're going to have to work a lot of hours. You know that your biggest expense is going to be taxes. You know that burnout is real. And you got all this free information, over the next 6 or 7 years till you graduate to do something about it, to educate yourself.
Yeah.
And I'm always encouraging people to do that, whether they're still in school or they're practicing now, because on the Dave Ramsey show the other day, he had Alex Hormozy, who is a
Oh, really? He was on Dave?
unbelievable,
That's funny.
yeah, unbelievable entrepreneur, Hormozy. And and Dave asked him something like, well, what would you recommend somebody to invest in? And Dave's real big on index funds and all that. And Hormozy said, well, Dave, I know that you're big on somebody investing in an S&P 500, but for me, I would recommend somebody to invest in an S&Me 500, meaning, like you said, investing yourself, getting that skill set, getting the tax knowledge to know that, hey, I'm going to make a lot of money, but I already know the things to do to save on taxes, or people like you or your companies to help them. So
Sure.
that's the
I mean, look, there's no more rigorous training than becoming a physician and a dentist and all and a specialist and what you folks are doing. I mean, the training is uh, you know military like of just what kind of what they how they break y'all down and make you work at it. So there's no one who can become a doctor who can't who doesn't have the aptitude or the drive or the self-discipline to learn what you need to learn about your finances because there's several great books out there, you know what I mean, and there's several great podcasts and YouTube channels just like the one you have where folks can listen to these and at least learn enough to start to build a broader system of you talked about your wrist in a skiing accident. Hey, I need disability insurance. It's really, really important right now. I'm the only earner in this family and I'm earning big, big, big money. And man, disability insurance is expensive, but if you're a young doc and your family's relying on you, you got to have it. If you don't have a rich uncle or something,
That's
you
right.
know.
Mitchell,
So
I really appreciate you spending your time with us today. So if people want to learn
appreciate you.
more about you, your businesses, give me some things to go to, and we'll make sure we link them below in the video as well.
Yeah, yeah. So you'll drop the links in the video, but you can follow me on Twitter at Baldridge CPA. I have a newsletter that comes out every week on Tuesday, the General Ledger. I have Ari Koseg, Better Bookkeeping, Baldridge Financial. I'm all over the place. You can find me, but yeah, I appreciate you having me on. And again, I just appreciate all your support along the way.
Excellent. So again, guys, I will link all of Mitchell's um, businesses and information below this. So I'm sure we'll be reaching out in the future for another talk.
Great to see you.